Greetings. Welcome to the Stocks with Josh show. Markets were choppy today. Shipping sector was up 5%. Healthcare and agriculture were the only two sectors that were down for the day, but the markets are still moving sideways. They're under that critical level of 39.22 that I've been talking to you guys about since the beginning of the year. And we had a close today at 39.19. We're just pennies off of that level. This is not a breakout or a sell-off. The markets want more data. That's what's going on. They're not going to do anything else this week until we get that CPI report. I'm going to touch on that, a bullish and bearish case for the markets. And since we're in January, we're still at the start of a new trade year. I'm going to continue the theme of focusing on education in charting as well as discipline to help anybody who's watching this channel become a better and more successful trader in 2023. We're going to briefly review some candles and what the volume is telling us right now. And I'm going to make it so easy that everybody's going to get it. Nobody's going to be left behind. If you like easy, then hit the like and the subscribe. And if you're tired of trading alone, hit all notifications on the YouTube bell. So yesterday we hit my target of 39.22 and we closed beneath it. So what is important about that? Well, for a move in the markets or a stock to be validated or confirmed, it needs to backtest every level of support and resistance. Stocks basically move one level at a time, either up or down like a stairwell going up or a stairwell coming down. I want to look at the SPX chart, which measures the S&P 500. I see three patterns that I think you guys should identify with your own eyes. The first is the double top that we got during December 1st and December 13th. This was a back test of the high of the 4,100 range. Once it did not break and close over 4,100 after it had come back up to it a second time, all momentum for an upward move flushed out of the markets, giving us the 8-day drop that we saw from the 13th through the 22nd of December. Now, I want to review with you guys what exactly is a double top. A double top is an extremely bearish technical reversal pattern. We had been moving up since October to get to where we got that 4,100. Then we got this bearish indicator. It forms after a stock reaches the same high price 2 times in a row, and it has a very small decline between the two highs. The bearish signal is confirmed when the stock drops below the middle of the two peaks after it fails on the second peak. This was approximately the 39.22 range. That's how I knew what I was looking for, and that's why I gave that range to you guys January 1st. I wanted to see the markets backtest that area, which is just an additional confirmation of the double top. The double top, though, had already been confirmed when we broke below 39.22. Double tops are very bearish, and it's not good that we entered into 2023 with such a bearish signal. Now we have a second confirmation of bearishness with yesterday's close beneath 3,900. It's not erased by today's move. That gravestone doji stands out as bearish. But I also want to point out a third and an extremely important indicator, in my opinion, the second most important indicator, and that's volume. As far as indicators go, you've got the top two. Price action. This basically tells you whether a stock is going up or down. Someone's going to say, well, yeah, of course. But what that does is it establishes trend. And the second is volume, which speaks to the market's momentum and conviction. So what type of volume did we get on our recent move up that we've had just here the last couple of days? Well, it was low volume. When stocks rise on low volume, that's what a lot of people call a fake out. The market's pumped before the open on Monday. That's when the volume is really low because most people aren't trading. It pumped early Monday, got up really high, and it made everybody think that the party had started, that the bullish move was back on. Of course, the pundits on CNBC came out. They started calling in all the permables. Come on, guys, get in here quick. Tell everybody that it's a buy, buy, buy. A permabull is someone who is permanently bullish. That's basically what the last 2 days have been like, but let's take one candlestick one day at a time. At this point, we're looking for a break below the current range. In my view, that range is still roughly 3,800 to 3,900. If we break definitively below 3,800 and we close below 3,800, it doesn't really matter if it flicks up and flicks back. We want to break and close below 3,800. Then we may be back on our way to 3,600. But I'm going to give you guys a quick test. What else will we be watching for to confirm that move? I'm pausing for effect. We'll be looking for the volume. If the buying is with low volume and the selling is with high volume, then we know what the smart money really thinks about the markets. So does this mean that we are 100% bearish looking forward? Do we just sit back on our SQQQ ETFs and our stock puts and ride them to riches? Well, I wish it would be that easy, but we're going to take a look at the bullish case so we can have a balanced view and not get too one-sided. We have to watch the dollar as measured by the DXY, and I'm going to take a look at the VIX, which measures volatility. Remember what the VIX is all about. It's a fear gauge for the S&P 500. And we're going to look at the important date this week that we've got ahead of us. Before I get into that, a quick station break from my Moomoo affiliate. Start a fresh investment journey by clicking the link in the top pinned comment for the Moomoo investment app. They're going to start you off this year with up to 15 free stock for opening and funding an account. And for a limited time, you get a chance to win $60,000. These guys are a licensed and insured exchange with commission-free trading, as well as the lowest retail margin account available. They've got that free level 2 data, a free stock screener for finding the hot stocks, and they've got the 8 order types for taking profit and protecting your capital. And currently, they've got the Stocks with Josh community page and a daily chat group. I call that the Stock Josh family. You can click the link, you can get your free stock, and you can come find the chat. So what are the bulls looking at that makes them think that this is bullish? Well, for one, the US dollar. When the US dollar was climbing all of 2022, that put great pressure on stocks. And if the dollar goes up, that's going to mean that stocks will fall. The dollar was rising because when the Fed raises rates, it combats inflation and it strengthens the value of the dollar. But in the last 2 months of 2022, the dollar's fallen off its highs. If the dollar continues to fall, then it does make room for stocks to go higher. In addition, we appear to be in a low fear environment because the VIX is very close to dropping into the teens. It closed today at 20.58. And VIX measures fear, and when the fear is low, we are far less likely to see any form of sell-off or capitulation. So I guess if we take all that into consideration, then I guess it means that it's all good. It's time to load up on stock. Well, I'm showing you guys the bull and the bear case. If the markets were easy and everybody could get rich doing this, well, then everybody would be doing this. This may just, though, be the calm before the storm. So what is the weather looking like ahead? Well, it's all going to come down to Thursday. There is a storm front blowing in with the CPI report at 8:30 a.m. And what we're looking for is for inflation to drop to 6.5%. And we're currently sitting at 7.1%. The goal, though, is a very low 2%. Any tick up will send these markets crashing. But alternatively, a big drop in inflation, and I think I'll be forced to close my short positions. Another case for the bulls is China has done a policy U-turn from COVID lockdowns, and it's back to business in China in 2023. This will directly impact the revenues of at least 25% of US companies and the stock market. So that's kind of what we're looking at. We're looking at a bull and bear scenario. It's the reason that we've been in a choppy sideways movement from 38 to 39, and we're going to have to see how things go before we really know what to expect. We've got bullish signals, but we don't have that bullish of a signal. We've got bearish signals, but we don't have confirmation. There's one thing that we have confirmation about, and it's that this week is going to be a wild ride. I want you guys to play it safe. I want you to be thinking and being prepared for anything. Use a stop loss going into Thursday. Be careful shorting any Chinese stock right now. The narrative has changed. That market got way more oversold than the US market. Let me know if you guys are feeling bullish or bearish and why in the comments. That's all I've got for you guys today. As always, peace and blessings, my friends. I look forward to seeing you in the chats.